Hey, this is Daryl Henry, and this video is key insurance gaps that put Maryland disability providers at risk. I'm going to talk you through 6 of the most common insurance gaps that I see when I'm working with new clients, the scenarios on when I see them, and what you need to be on the lookout for and what you can do to fix it. All right, so the first one is uncovered operations. The scenario where I typically see this is I'm working with a provider that started out as a home health agency or an in home support agency, and they've expanded into group homes or residential programming of some sort. And a lot of times, what these providers have done is they bought their liability insurance online. And on the policy, it'll say home health agencies. But if you dig into the policy, it'll say this policy provides no coverage for residential operations. That means all their growth, the things that they did, like go and rent apartments or a home and then provide 24/7 care to people, all of that is just totally uncovered, just not covered at all by the liability insurance policy. So it's something you have to be aware of. The second gap that I'll see is no abuse and molestation coverage or not enough abuse and molestation coverage. I see this a lot when I'm working with somebody that has their insurance through a broker that is not well versed in the marketplace, or they bought their insurance online. And in those scenarios, I'll see a policy that either totally excludes abuse and molestation or has a sublimit of $25,000. And when you start looking at how much these lawsuits can cost, I mean, an attorney can very easily cost $500 an hour. It's not hard to think about how you blow through $25,000 just immediately. So that's a big gap to be on the lookout for. The third gap that I see very frequently is employment practices liability insurance. Once again, the most common scenario where I see this is an organization that has grown tremendously. It starts with a person that bought everything online, and now they have 50 caregivers that are working underneath of them, and they're hiring and firing people all the time. But they've never had anyone talk to them about, well, what happens if one of those caregivers comes back and says, well, you hired me, or you didn't hire me, or you fired me because I'm gay, black, white, Latino, old, young, whatever. Once again, these attorneys are incredibly expensive. And so it's not hard to come up with a scenario where you need an attorney for 20 hours, they're 500 bucks an hour. You're going through a lot of money, and the insurance program is not there to protect you. The fourth gap I see very frequently is cyber liability insurance. And there's a couple reasons for this. One goes back to the scenario of an organization that's grown from the beginning, has had a broker that may help them out in the beginning, but maybe doesn't have a whole lot of experience in the space, or you bought your insurance online. The other pushback I'll hear a lot from providers is, well, I have all my data in the cloud. Look, the deal is that your people are your number one vulnerability, and that's how cyber threat actors are going to get into your environment. And no third party provider is going to protect you in that scenario. So, as you've grown, the more and more data you keep in your system and the more and more dependent you are on those systems, you have to be aware of those cyber risks that your business has and your organization has. The fifth gap I see very frequently is hired and non owned auto. And this is because at the very beginning, what happens a lot is people buy their insurance online. They'll buy their liability insurance online, may or may not have hired a non owned auto, which is auto liability coverage that sits on top of your employees' vehicles auto insurance and pays second. And a lot of service providers, especially in home support, will have caregivers that drive their personal vehicles to and from homes. So you'll buy a liability insurance policy that doesn't provide coverage, and then you'll buy an auto insurance policy that doesn't have coverage, and you still have this gap for hired and non-owned auto, where if one of your caregivers is driving around and gets into a terrible accident or just has no auto insurance and doesn't tell you, I can't imagine of any employee that wouldn't tell you if their driver's license got suspended. But in that situation, that scenario, you're in a terrible, terrible gap. You are terribly exposed for a large lawsuit. And the sixth gap I see very frequently is business income and extra expense coverage, not having enough of it or not having any at all. And this is really for group homes or adult daycares because you have to be licensed and zoned for a specific space, and moving is not easy. So if you have your group home, think about how long it took you to get zoned and get the use of occupancy and licensed for that space. If there was a fire in that building, how long would it take you to get another home? Well, the answer is probably too long, probably longer than it would take for it to make sense to just wait it out and repair the building where you were located. And in that situation, you're going to need money for loss of net income and continuing expenses while that space is out of operation. All right, so those are the six most common gaps I see in IDD programs. Look, if any of that sounds like you and you want to talk, my contact information's at my website at insuranceforentrepreneurs.net. And look, if this was helpful, please hit like and subscribe. It helps other people like you find the content. And as always, thank you so much for watching. Go build something great.